Hi students, I hope all of you understand the last lecture. Okay, so in the last lecture we saw there are three steps are there for the amalgamation in the nature of merger or in amalgamation in the nature of purchase. For the solution of the problem there are three steps. The first step is what's computation of purchase consideration, second step is what's closing the books of the transfer company, and third step is what's incorporating the assets and liabilities in the books of the transferee company and preparation of amalgamated balance sheet. Okay, so these three steps we have to follow. Okay, so in this lecture we will see the first step, which is related to the computation of purchase consideration. Okay, so in the next slide, see, the first step is what's purchase consideration. So what in by purchase consideration? In case of amalgamation, purchase consideration is the agreed amount which transferee company pays to the transferor company in exchange of the ownership of the transferor company. Okay, so it's very simple. It means what? The transferee company is payable to the transferor company. Okay, so it means what? The agrees to pay a fixed sum to the transferor company. It is called as what? It is it means what? It is the purchase consideration. Okay, so now see, for the calculation of the purchase consideration there are five steps are there, or five methods are there. So which are those methods? First one is a lump sum method, second one is a net asset method, third one is a net payment method, and fourth one is the intrinsic worth method, and last one is what's the exchange ratio method. Okay, so we will see one by one. Okay, so now first we will see the lump sum method. Okay, so now see, the first one is a lump sum method. What is the lump sum method? According to this method, the purchase consideration is determined in fixed sum through negotiation between transferor and transferee company is nothing but what? The lump sum method. It means what? When the transferring companies agree to pay no fixed lump sum amount to the transferring company, it is nothing but what? The lump sum payment method. Okay, the lump sum payment method of the purchase consideration. Okay, so for example, suppose a limited and a limited is there, and so this a limited agreed to take over the business of b limited. Okay, so a limited is what? Agreed to take over the business of b limited for rupees 50 lakh. What's for rupees 50 lakhs? So it means what? A want to pay to the b rupees 50 lakh lump sum amount. Okay, so this is the lump sum method of the purchase consideration. So next thing is what's net asset method. So second method is what's the net asset method. According to this method, the purchase consideration is calculated by calculating the net worth of the assets taken over by the transferee company. Okay, so the net asset means what? It is and the calculate by the considering the agreed fair values. Okay, so what's agreed fair values of the assets and the liabilities which is the taken over by the transferee company is nothing but the net asset methods. Okay, so in a simple language, what do you mean by net asset method? The agreed value of assets taken over and minus the agreed values of the liabilities. Okay, so it means what's the assets minus the liabilities we have to use in the net assets method for the calculation of the purchase consideration. Okay, so now see how to calculate the purchase consideration under this net asset method. So in the next slide, so this is the format for the calculation of the purchase consideration. So first of all we have to take the agreed value of assets taken over. Okay, so it means what's the transferee company taken assets from the transferor company, which is the agreed value, which is the fair values we have to take. Okay, so assets, all assets we have to take, the goodwill we have to take, land and building we have to take, plant and machinery, furnitures, stock in trade, debtors, bills receivable, investment, cash in hand, cash at bank, etc. So this total we have to make. Okay, so from this total you have to minus the liabilities. Okay, so agreed values of liabilities taken over. So creditors, bills payable, debentures, etc., worksman profit sharing fund, works securities deposits, provident fund, etc. So these all the liabilities you have to minus from the assets, you will get the purchase considerations. But one more thing is keep in mind, so while calculating the purchase consideration, so some things are not included. So which are those things? For example, the fictitious assets are not included in the while calculating the purchase consideration. So fictitious assets means, for example, the preliminary expenses, discount on issue of shares, and accumulated losses. Like these things are not included in the purchase considerations. So as well as some things, for example, the accumulated profits, reserves like capital reserve, share premium, or general reserve, or debenture redemption reserve, workman's compensation reserve, insurance funds. These are not considered into the purchase consideration. Okay. So and one more thing is what's, while calculating the purchase considerations, we have to take the fair value. If it is not the given fair value, then we have to take the book values of the assets as well as the liabilities, if it is not given the fair value in the problem. Okay. So like this you have to calculate, the purchase consideration. Okay. So in now we will, in the next slides we will see problem on the purchase consideration under the net asset method. Okay, under the net asset method. So see, so this is the problem one. Following is the balance sheet of Maltesh Limited as on 31st 3 2015. Okay, so this is the vertical balance sheet is given. Okay, so this vertical balance sheet is given. So the heading number first, equity and liabilities. Under that, shareholders fund, what shareholders fund, and the share capital, and note number one, and the amount is rupees 2,80,000. Okay, amount is rupees 2,80,000. So note is given. So what's the notes? It means what this 2,80,000, how it is bifurcated is given in the note. Okay, so in the next slide see, so see here note number one, 24,000 equity shares of rupees 10 each, it is rupees 2,40,000, and the 4,000 10% preference shares of rupees 10 each, rupees 40,000. The total is what's 2,80,000. Okay, so this is the 2,80,000 is given in this balance sheet. Next, reserve and surplus, note number 2, amount is rupees 28,000. So now this again, this reserve and surplus having the note. Okay, so now see the note number 2, reserve and surplus. So under that, general reserve is rupees 40,000 less preliminary expenses 32,000. So this 40,000 minus 32,000 remaining is rupees 8,000. And profit and loss account, it is the surplus, it is the plus balance rupees 20. So 20 plus 8,000, it's the 28,000. Okay, so like this reserve and surplus is 28,000 is there. Next, non-current liabilities is the 10% debenture is rupees 60,000. Current liabilities rupees 40,000. It's a total of the liabilities, what's equity and liability, the total is 4,08,000. Okay, so next now see the assets. Non, under that assets, non-current assets, tangible fixed assets, note number 3, amount is rupees 2,60,000. Okay, so for this purpose note is given, and note number 3, now see the note number 3, which are those tangible assets are there. Land and building is rupees 1,60,000, plant and machinery is rupees 80,000, furniture rupees 20,000, the total is 2,60,000. Okay, so these are the tangible assets are there. Okay, so intangible fixed assets, it is the goodwill, and the what's the goodwill amount is rupees 40,000. Inventories rupees 40,000. Trade receivable means debtor is 60,000, and cash equivalents rupees 8,000. The total is what's 4,08,000. Okay, the equity and liabilities also the 4,08,000, and the assets is also 4,08,000. Okay, so now see all these notes we saw. Now see, Sai Limited agreed to take over the following assets and liabilities at agreed values. Okay, so now keep in mind there are two companies are there. So, okay, so which are those two companies? So Maltesh Limited and the Sai Limited. Okay, and the Sai Limited agreed to take over. It means what? Sai Limited is the transferee company and Maltesh is the transferor company, because the Sai is taking the business of the Maltesh Limited. So that's why Sai it is and the what's the transferee company, and the Maltesh it is and the transferor company. Okay, Sai Limited agreed to take over the following assets and liabilities at agreed values. So agreed values means what? Sai is going to take the business of these values of the assets. Okay, so these are the fair values. Okay, so for the goodwill rupees 32,000. So land and building 30% plus, plant and machinery 20% less, provision for doubtful debts at 10%, stock inventory 10% less. Okay, so what is this fair value? It means what's in the balance sheet the goodwill amount is rupees what's 40,000, and here it's 32,000. It means what is the fair value, so we have to take while calculating the purchase consideration rupees 32,000. Okay, so land and building it's a 30% plus. It means what's in the now see in this note number 3, tangible fixed assets land and building rupees 1,60,000. So on this 1,60,000 plus 30% we have to again we have to add. Okay, 30% we have to add. Okay, so it means 48,000 also we have to add in this 1,60,000. Next, plant and machinery rupees 80,000 is there, and here plant and machinery 20% less. It means what's from this 80,000 we have to minus the 20%. It means what 16,000 we have to minus from this 80,000, and we have to take as a while for calculation of the purchase consideration. Next, furniture it's a 20,000 as it is we have to take. Next, provision for doubtful debts at 10%. So doubtful debt is related to the debtors, and what is the amount of the debtors in the balance sheet? Now see in this current assets. Next, trade receivable in bracket debtors is related to that rupees 60,000 is there. So minus 60,000 we have to minus 10% we have to minus. It means what 6,000 we have to minus from this 60,000. Okay, so next, stock 10% less. So now see here stock is also given, inventories 40,000, 10% we have to minus. It means 4,000 we have to minus. Next, see Sai Limited has also agreed to discharge current liabilities of Maltesh Limited. It will not tax over cash at bank. Okay, so it means what Sai Limited is not taking the cash and the cash at bank. So while calculating the purchase consideration, there is a no need to take the cash and cash equivalents rupees 8,000. Okay, so it will not take over cash at bank. Other assets are taken at book values. Okay, the amount of purchase consideration is discharged by 80% in shares and the balance in cash. Compute the purchase consideration. Okay, so this is the information is given. So whatever the fair value, instead of if it is whatever those are the fair values given, no, that only have to take the fair values, and other than that we have to take the book values. Okay, so now see, so first of all we have to take the assets and the tangible fixed assets. Now see note number 3, tangible fixed assets land and building. Okay, so this land and building 1,60,000 plus this what's the otherwise directly first of all we will take the goodwill. Okay, so now see the goodwill we will take the first. Okay, so goodwill here amount is given 32,000, and in the balance sheet is rupees 40,000. So fair value we have to take. So this 40,000 now like this we have to calculate the statement showing in a purchase consideration. Okay, so like this we have to draw the format. Okay, first of all we have to take the assets and less agreed values of liabilities taken over. Okay, so now see first of all we have to take the goodwill, and 32,000 it is the fair value. So land and building it is the 1,60,000. So this note number 3, land and building 1,60,000 plus in the fair values is given what's land and building it's a 30% plus. So this 1,60,000 plus 30%, it means what this 30% you have to calculate on this 1,60,000. Okay, so this land and building 1,60,000 plus 40,000, the total is 2,08,000. Okay, so now related to the tangible fixed asset, the plant and machinery rupees 80,000. From this 80,000 we have to minus the 20% less, because fair value is what's 20% less. Okay, so 20% less means what's how many rupees 16,000. So 80,000 minus 16,000 it's a 64,000. Okay, so next, furniture 20,000, book values as it is we have to take the, because fair value is not given, so this fair value book values as it is we have to take the 20,000. Next, stock. So now see here stock is given in the balance sheet rupees 40,000, and in the fair value stock inventory is 10% less. This 10% we have to minus from this 40,000. 40,000 minus 4,000, it's a 36,000. Next, debtors. The debtors is given in the balance sheet rupees 60,000, and here provision for the output date is at a 10%. So this 10% we have to minus, okay, 54,000. So again, see which are those remaining the assets. Tangible fixed assets all are the over. Goodwill also we taken, stock also taken, debtors also taken, cash and cash equivalents remain. But in this last paragraph it is given the second sentence, it will not takes over cash at bank. Okay, so the considered is what, there is no need to take the cash at bank, so don't take. Okay, so next, agreed value of liabilities taken over. Okay, so now first of all just take the make the total of the assets. The total of the asset is 4,40,000. From this 4,40,000 you have to minus the all the liabilities. Now see in the balance sheet, so which are those liabilities? Share capital, it's not the liability. Reserve and surplus, it is also not the liability. So 10% debentures, it is the long term liability. So this long term liabilities you have to minus, as well as this current liabilities 40,000. So this also you have to take. So these both liabilities you have to take, debentures plus the current liabilities. Okay, so now see here, 10% debenture is a 60,000, current liabilities is the 40,000, the total is 1 lakh. So from this total assets you have to minus this 1 lakh. 4,14,000 minus 1 lakh, remaining amount is what, 3,40,000. So this 3,14,000 is nothing but the purchase consideration. Okay, so now see in the last para, so the amount of purchase consideration is discharged by 80% in shares and the balance in cash. Okay, so whatever the purchase consideration is there, no, so this purchase consideration is discharged by 80% in shares and remaining is the balance. It means what, so this 3,14,000 is the purchase consideration, and Sai Limited is discharged the purchase consideration by the shares is 80%. So it means what's 80% on this 3,14,000, it's a 2,51,200, and whatever the remaining is nothing but what's the cash. Okay, so cash is the 20%, it means was 62,800. Total is what's 3,14,000. So like this you have to calculate the what's the purchase consideration under the net asset method. Okay, so all of you note down this problem as well as the solution, and I hope you will be the understand. If you have any query you can direct text me or the call me. Okay, thank you.